If you want to know the right versus the wrong time to buy or rent a home, then watch this video. I'm going to tell you the things that friends, family members, coworkers, real estate agents, and news anchors are not going to tell you. And that big thing is, if you don't know how to rent and how to buy a home, then you're probably never going to know if you even made the right decision. I can say this because I've bought, rented, owned, and sold homes personally and helped hundreds of people professionally. See, we just have so many variables in our own lives that anyone on the outside trying to give us their own personal advice on whether we should rent or buy or how to do it, they don't always know all the variables unless we share it with them. And sometimes one of those variables is just a goal. Maybe you want to change careers and you haven't told anyone about it yet. Maybe it's the location you want to live or the lifestyle you want to live. And if you listen to the outside advice that doesn't know all your variables, then they may help you go on a path that leads you away from your goal. And I don't want that for you. I want you to make your own decision and be the expert. See, it wasn't until I had over 500 conversations with real people making real housing decisions that I realized even people with good experience buying and selling homes or renting, they tend to make mistakes because they enter the decision without a full plan or purpose. And I think the only way for you to really know if you're making the right decision is to understand these 7 principles of how the housing market works. The first one is how your money works. It's basic personal finance and economics. Then it's how homes are valued, which is how the housing market works. Then you want to know when and how to rent a home, and also when and how to buy a home. And even if you think you want to rent, you should know how to buy. And even if you know you want to buy, you should know how to rent. Next is how to borrow money, which is just the lending and mortgage stuff. And number 6 is probably one of the most important ones, and it's mindset. You want to know how to be content with your current situation so you can make the best housing decision later. And last, it's putting it all together and knowing how to plan properly, and that's learning how to set housing goals. See, unfortunately, schools do not teach us these 7 things, and most people don't have a good grasp of all of them either. And it really has nothing to do with their intelligence. It has to do with the fact that unless someone intentionally learns these things, like you're doing right now, then there's really nothing in our daily lives that teaches us all these things. And none of these concepts are really difficult on their own. However, I believe we do have a broken system, and it doesn't teach us these concepts early enough in our schooling. And once you learn these concepts, you'll easily be able to pick out things like news stories, and you'll know whether they're incorrect, whether by accident or purposefully. And sometimes that's just for the news to make a sensational story, and sometimes it breeds gloom and doom. And the foundational principle we're going to talk about today is the first one, how your money works. And I know it's going to sound so boring, but it is so important for you to understand some basic terms before you really can even go forward with renting or buying properly. I'm sure you've heard some of these terms before, but it is so important for you to not just understand what they are, but how they apply and affect your life. If you want to make financial goals, these are foundational terms that you should grasp. And just remember, personal finance is a journey, not a destination. So just start by setting realistic goals, creating a budget, tracking your spending. And once you gain more confidence, you can explore different investment strategies and really build a solid financial foundation for your future. And it doesn't matter if you want to rent or buy, understanding your finances is going to help you, move away from making guesswork and actually making informed decisions. Let's start with income. That's just the money that you're bringing in on a regular basis. One type of income is your salary or wages, which probably comes from just your job. And usually your job wages can come weekly, bi-weekly, or monthly, and sometimes comes with benefits like health insurance or paid time off. Another kind of income is side hustles. And this is just some additional income stream that you've created outside of your primary job. Some people do freelance work like writing, graphic design, or web development. And if you're looking to increase your income, you could explore online ventures like doing any of those or selling crafts or even starting a blog. Another kind of income is investments. And this can be your source of income also. It may be owning stocks, bonds, rental properties, really anything that can generate other income from dividends, interest, payments, or rental income. After income is going to be expenses. And this is just the stuff that costs you money regularly. And there's different kinds of expenses, like one is fixed expenses, and these costs kind of remain pretty much the same every single month. They're usually things that you need and are tough to get rid of. Some of those examples are going to be rent or mortgage payments, maybe utilities like electricity, internet, water, phone bills, and it even includes your minimum payments on loans or credit cards. Next is variable expenses. And these kind of fluctuate from month to month, and it really depends on your spending habits. And this includes groceries or transportation costs. So that's like gas, if you have to take the bus to get somewhere, or even going out to eat and movie tickets, personal care stuff like haircuts and gym memberships. Then the last category is discretionary expenses. And these are things you don't really need and you could probably cut back on if you really wanted to. And it's stuff like getting new clothes, going out to eat more often than you need to, streaming services or hobbies, and travel. Now, one of the most important things about expenses is actually tracking your expenses. If you just take a look at 1 month of your expenses, it can actually be pretty eye-opening. If you can identify areas where you might be overspending, it allows you to prioritize things like wants versus needs when you create a budget, which we'll talk about later. Next is savings, and it is such an important part of financial security. It's a portion of your income that you set aside for the future, and here's why it's so important. Emergencies. Life throws you curveballs sometimes, and really it's things like unexpected car repairs, medical bills, or even a job loss, which can create financial strain. So having an emergency fund will really help you weather those storms without going into debt. And what's even worse, for some people who have maxed out credit cards and don't have any room for borrowing, they're kind of stuck. And besides paying the debt, those people really need to have some savings. Hopefully you'll be able to set aside 3 to 6 months of all your living expenses. And it's most important to actually be honest with yourself. Don't just guess at those months. Start your budget and track what you actually spend. So when you have 3 to 6 months of an emergency fund, it actually can cover you for 3 to 6 months. Once you have your emergency fund set up, then you can have a savings that's for long-term financial goals. Maybe you're saving up for a house, a car, or some dream vacation. Then the next one that usually seems like it's never going to happen, it's so far away, is your retirement. It might seem like it's really far away, but it's never too early to start saving. When you start building that retirement nest egg, it ensures that you have a comfortable future after you stop working. Developing good saving habits early is super important. Even setting aside a small amount consistently can benefit your future. So just think about having maybe an automatic savings or setting up some sort of recurring transfer from one of your checking accounts to a savings account each payday. Now, next up on our list is investments. Investments allow your money to grow over time and help you achieve other financial goals faster. However, investments do carry some risk, so it's really important for you to understand the different types of investments before you dive right in. Here's some common types of investment options. First is stocks. When you buy a stock, you're essentially buying a small ownership stake in a company. And your hope is that that company's value will increase over time, which will lead to a rise in the stock price. You can also earn income through stocks, things like dividends, which are a portion of the company's profits, and that company's decided they're going to distribute it out to shareholders. Next up is bonds. You're pretty much loaning money to maybe a government or a business, and in time, you're going to get a return on your investment. You'll receive regular interest payments and get your principal back when the bond matures. Bonds are generally considered less risky than stocks, but also generally will offer lower returns. Next up is mutual funds. These are a type of investment that pulls money together from different investors, and it allows them to invest in a diversified portfolio of assets such as stocks, bonds, and other securities. Mutual funds are managed by professionals, which can be a good option for those who don't really have the time or knowledge to manage their own investments directly. And investing can be a powerful tool for growing your wealth, but it's really important that you do your research. Understand how much risk you can take and consider seeking professional advice before you put all your money, or at least a significant amount of money, into an investment. Next up are a couple terms that are really important for you when you're renting or buying a home, and that's debt and credit. Debt can come from various forms like student loans, credit card balances, mortgages, auto loans, or personal loans, and it's really just money that you owe others. And while debt can be a useful tool in making large purchases like a house or a car, it's really important that you borrow responsibly and just ensure that you can afford those monthly payments before making that decision. Next is credit. And your credit score is just really a number that represents what credit companies think is your credit worthiness. It reflects past borrowing, your payment history. It can affect your ability to even get a loan or credit cards, or even the rates that you pay. So maintaining good credit habits, like paying your bills on time and keeping your credit card balances low, it's really important to building strong credit. Next up are going to be assets and liabilities. Your assets are things of value that you own. They represent what's called your net worth, and it's the total value of everything you own minus what you owe. So examples of assets could be a car or a house, savings accounts, investment accounts, or personal possessions you own. Now, liabilities are your debts. It's the money you owe others. And that could be credit card balances, loans, or outstanding bills. Understanding the difference between assets and liabilities is crucial for getting the clear picture of your whole financial health. Sometimes it seems like you have tons of stuff, but if you still owe a ton of money on all those things, those are not assets. Now let's talk about budgeting. If you don't have a budget now, or if you've never ever created one, now is the time to give it a try. Most people I've helped in the past have been surprised when they create a budget and they see the difference of what they think they spend, and then later look at their bank statements and track what they are actually spending. It's really easy to swipe a card, pay later, or use some online payments to just purchase things you want. However, creating a budget is fundamental. It really helps you map out where your money goes and where it comes from. It helps you plan effectively. Creating a budget involves listing all your income sources, tracking your spending, setting financial goals, and adjusting your expenses so you can live within your means. The use of tools like budget templates can really simplify the process and help you maintain a clear view of your financial health. Now, the importance of an emergency fund. We've talked about what an emergency fund is, but I want to cover it again. It is an essential financial tool designed so you can cover unexpected expenses or financial emergencies. Ideally, you want to be able to cover 3 to 6 months of expenses, providing a cushion so you can stay afloat in tough times without needing to incur more additional debt. You can have your emergency fund as part of a savings or even a separate account on its own. It really doesn't matter. The important part is that you have made a budget and you can see how much you actually spend each month, then decide how many months your emergency fund should cover. You'll be really disappointed if you fake it till you make it and your budget assumes you spend $4,000 every month. Then, when an emergency fund comes into play and you need that money, and it turns out you spend $5,000 every month, well, then you're only going to be good for 1.5 months and not 2. And it won't be fun to find out when it's too late. And lastly, basic economic principles. And it's probably like no one's favorite part, but it really is how the housing market works. Basic economic concepts like supply and demand directly influence the real estate market, and you should understand whether you're a renter or a buyer. Knowing the principles of supply and demand helps you understand market trends, and you can make better decisions about when and where to invest in property. See, the home buyers and home sellers I've helped tend to be better off when they understand the basics of how the housing market works. For example, buyers who don't understand how the housing market works tend to write offers that are much lower than they should be, and then they don't end up getting the house that they want and keep trying over and over again. Home sellers who don't understand the concept, they usually are disappointed and they don't get what they want price-wise for their homes and sometimes pull their home off the market for the wrong reason. For renters, it's important because you're going to be better off understanding when to expect rents to increase and when you can negotiate your rent for a better rate. Well, we got through some of those boring terms and concepts, but they are the foundation to be able to understand the rest of the stuff. If you think that some of this information was helpful, like this video and subscribe to the channel so you can continue learning more about these individual terms and concepts, but most importantly, all 7 of the foundational principles so you can be a home buying or renting expert.